So crypto hedge fund Defiance Capital wants to distance itself from troubled rival fund Three Arrows Capital, or 3AC. A statement posted to Defiance Capital's official Twitter account on Friday tried to clarify its relationship with 3AC. It says Defiance is a separate and independent fund set up in 2020, and none of its assets under management were raised by 3AC, its founders, or any of its affiliates. This is, of course, not the first firm that has tried to distance itself from 3AC. We saw TPX Capital, which called itself the over-the-counter trading arm of Three Arrows Capital, say earlier this month that it's an independent firm with separate management. We also saw similar statements from Avalanche and DYDX. So just to go into the statement a little bit, Defiance statement says that the fund's founder, Arthur Chung, had no visibility on Three Arrow Capital's financial statements or conditions until the news broke in June that it was in trouble. But then the statement goes on to say that Defiance was materially affected and prejudiced by the liquidation of Three Arrows Capital, and that it's committed to doing everything to try and recover the assets affected. I want to know what you guys make of this, so I'll throw it to you first, Jen. I saw your hand.
Yeah, so it's interesting that all these firms are really trying to separate themselves from Three Arrows Capital. There was a report that came out by Blockworks, I think it was about a week ago, that kind of started to unpack this unclear relationship between the two firms. So the report says Defiance Capital was incubated by 3AC, and the firms had a number of co-investments together. It also said that it appears that 3AC played a big role in the launch of Defiance Capital, providing middle office and back office support and consulting on hiring. That seems pretty intertwined to me. And the fact that that information is now out there through verified sources in the media, compared with this tweet that's really trying to kind of separate the two companies, just feels a little bit odd to me.
I mean, I'll pick it up from there. The whole situation is a little odd, right? And I think it should be, because we don't know where all this money went to and where it's going to go in the future, right? Three Arrows Capital was huge, and it's very clear that they were not operating as a standard hedge fund, let alone anyone with like rational reasoning at this point. I mean, they were taking out huge loans from multiple players using collateral over and over and over again, pledging to different places. And that's why you end up in a place where a lot of firms are materially affected, because the collateral that was put on the table could be seized by different counterparties, many different counterparties. And the ones who got it first are the ones who are basically okay. They maybe took a little bit of a hair trim. But the other ones who weren't there fast, guess what? They don't have any of that money, and they're going to be going into Chapter 11, trying to seize whatever Three Arrows Capital still has on its books. And the stuff that it has on its books is not that great, because it's a lot of VC equity with very long time horizons. And who even knows if that equity is worth anything in the next few years? It could be worth absolutely nothing. We just don't know at this point. So the firms that really went out in this situation are the ones who were able to grab the Bitcoin or the stable coins that were put up as collateral in the first place. So for Defiance Capital, this will be very interesting. They're definitely a well-known VC firm within the space, operating a lot within DeFi circles. And yes, it's a huge knock to them. It's not surprising, though. I think we're going to see many more of these. We're also going to see some hedge funds and some VC firms quietly disappear. I think a lot of people were hit by 3AC. I think a lot of people were caught up in the cult of Suzu and Kyle Davies. And we're going to see that continue to play out over the next few months. Adam, I'll throw it up to you for your take.
Yeah, I think the really interesting part for me about all of this has more to do with how much we didn't know and how much that's in direct conflict with much of the ethos of the Web3 space. Web3 really is about taking out the sort of privileged middlemen, who typically obscure a lot of things, and you kind of needed them in old systems because you had to rely on trust. But in these new smart contract-driven systems, sure, they have problems and technical challenges and stuff like that, but ultimately, you should never have this type of problem. Ultimately, all of the trades that are being made, whether we know who's making them or not, there should be no possibility of over like rehypothecating an asset, lending it to somebody else, and then using it as collateral for somebody else in something else. Because again, we have smart contracts; they can custody this stuff, which doesn't require you to actually put it at risk. And we've seen protocols like Maker, and we've seen other protocols that have seemed like they've survived this because they required that type of thing. So again, when we look at kind of this space and we look at all of these different funds that are out there, these are funds who are using sort of the edifice, and the speculative potential of these different projects and these different technologies as a way to justify an investment thesis that actually is very, very similar in many ways to sort of the traditional way we do things. And this blow up, I think, is really kind of iconic of that. So it is interesting to see this come out. I imagine that this company and many others are going through something similar to what if you were like a subsidiary or in some way related to Lehman Brothers in 2008. It feels like there's probably a similar relationship there where Three Arrows Capital at this point has already become an infamous company that is going to have the stink of like gigantic fail on it for a very long time to come. And if you're somebody who is still in business and has tangible, connections to that ecosystem, then it's not a great time to be that. So I'm not surprised by those moves.